Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an update about the economy and the investment market so you can understand what we see in the global landscape. Well, 2016 starting off with some more turbulence. We've had a few questions from a few of our radio and TV listeners. Do we think this is going to be really the big market correction that people saw in 2008 or 2000? I feel absolutely not. Now you have to remember, market volatility, whether it's in the bond market, the equity market, real estate, gold, you're always going to have these short-term fluctuations. And quite honestly, there is nothing you're going to do about it. You have to accept, while nobody ever wants anything to go down slightly over the next month or 6 months, you have to accept this short-term volatility. I don't care if you're a conservative investor, you're a growth investor, you're going to see this volatility. But again, to answer the question, do I see a 2000 or 2008 this time? No. You have to remember what transpired in 2000 and 2008. Much different scenarios. In fact, we were going into a recession. Right now, the U.S. economy is chugging along a little over probably 2.5%. Unemployment's good. We don't have an overheated economy or an overheated, generally speaking, market. A lot of the volatility that we've seen kind of the middle part of last year and today is really, I think, due to kind of the China scenario. China's economy is slowing. We've known this for 3 years. This is nothing new, but media obviously hypes it, and often you see a little bit of volatility. Is there any more volatility today than what we saw the last 5, 10, 15, 20 years? I don't think so. But you're hearing about it every day on the news, which I think gets people thinking, wow, we're down 4 or 5%. Could we be down 40 or 50? Again, we are not in a recession. We don't see signs of recession. We look at these things closely every single day. If we start to see a real slowing economy and the U.S. is headed for recession, we will in fact raise significant amount of cash and get very defensive. But in the meantime, we're going to have these short-term bouts of volatility. It's going to be natural and it's going to be forever. And that's the bottom line. Volatility is here. It's not going away. And ultimately, if the U.S. economy continues to grow, we should see good returns in the future. And sometimes you'll have a negative year. Sometimes you'll have a flat year. And other times you could have years that are up 20, 30%. So realize every year is not consistently the same, and general volatility is here to stay. And again, whether you're conservative or you're growth oriented, you're going to see some volatility in your portfolio. You know, the Fed raised rates one time last year towards the end. They probably, assuming the economy continues on a stable footing, will probably raise rates again this year in 2016. We firmly expect that. We firmly expect earnings to come out as we start to see last night with Alcoa. We feel earnings are going to be decent. Last year earnings grew around 5 or 6%, generally speaking. This year they're looking for earnings growth somewhere between 6 and 7%, generally speaking. Oil prices hit, generally speaking, a new low yesterday. Do I think oil prices are going to zero? Probably not. There's a big supply and demand factor that's bringing oil prices down, which does help most consumers and businesses and hurts very little of other on the other side. But oil prices could stay down low for a long time simply because of supply and demand. Our technology is bringing on more supply, not fast enough growth to use up that supply. So again, oil prices are low. That doesn't mean they're going to stay low forever. They could stay low for the next 6 months or 6 years, or we could see prices back up in the 60 or 80 range in the next 12 months. It's hard to predict these things, but as long as you're not a short-term investor and you realize that the economy is doing well, we're currently not in recession, this is a garden variety volatility, we feel there's great opportunity as we travel through 2016. If you're a client of our firm and you have any questions, please give me a call. If you're not a client of our firm, it's time you became a client. Schedule a consultation, sit down, talk with our firm, and find out the difference. Make sure you have yourself a safe and profitable day.